Explaining a first-lien HELOC, a home equity line of credit that replaces a primary mortgage, requires shifting a borrower's perspective on debt. It functions as both a mortgage and a checking account in a single product. To prove the accelerated payoff timeline of this structure, we use the customized Wealth Builder Comparison PDF. This document models their exact cash flow against a traditional amortized loan. Before opening the tool, gather two required items: the borrower's complete financial profile, including their income, expenses, and deposits, and the current TLS rate sheet. Generating this document accomplishes two goals at once. It gives the client a clear visual of their interest savings, and it satisfies the underwriter's requirement for proving net tangible benefit, which is the regulatory requirement proving the new loan financially advantages the borrower. Step 1 is accessing the calculator. Log in to the Third-Party Originator, or TPO portal. Navigate to the Specialty tab and select the Equity Access Suite. Start by defining the loan parameters. Select your loan purpose, such as a purchase, and set the loan term to the 1-month adjustable option. Next, determine pricing. The note rate equals the SOFR index plus your selected margin. A 3.25 margin plus a 4.304 index establishes a 7.554% start rate. Then enter the $900,000 home value, $750,000 limit, and $700,000 initial draw. The initial draw must exceed the $150,000 threshold. Now establish the comparison benchmark. Input the terms of a traditional 30-year fixed mortgage, including the interest rate and any extra monthly principal payments the borrower plans to make. Accurate inputs here are essential. The entire psychological impact of the final presentation relies on contrasting the dynamic wealth builder structure against this rigid, traditional baseline. The main mechanism of this loan is the nightly sweep feature. Every deposited dollar goes toward the principal balance at the end of the day, immediately reducing the next day's interest charge. To simulate this effect, start by entering an initial one-time deposit. This typically represents cash transferred from an external checking account right after closing. Next, add their recurring income. You can map up to 5 distinct repeat deposits, such as entering a $3,900 biweekly paycheck for the primary borrower and a $2,800 biweekly paycheck for their spouse. You must also deduct their outflows. Accurately itemize their monthly spending by adding rigid categories like car payments, credit card bills, general necessities, and the property's taxes and insurance. The system allows you to model future financial events as well. You can add unlimited future one-time deposits, like an expected annual bonus, or scheduled future expenditures, specifying the exact month they will occur. Mapping every dollar of incoming cash and outgoing expense transforms a static loan application into a personalized debt reduction timeline driven by actual cash flow. With the data entered, navigate to the Results section. You can toggle between the two primary visual outputs, the reduction timeline and the cost comparison view. This chart shows payoff timelines. The Wealth Builder pays off in 11 years, while the traditional mortgage drags past 24. The cost comparison chart separates total principal, interest paid, and ongoing expenses. Finally, interest as a percentage of principal is calculated. Wealth Builder settles at 46%, while the comparison exceeds 106%. Scroll down to explore the detailed month-by-month schedules. The Wealth Builder schedule displays the declining monthly balance alongside the remaining available credit, while the comparison schedule shows a standard amortization table. Comparing these percentages illustrates the impact of front-loaded interest. It demonstrates how a standard mortgage can cost a borrower more in interest than the value of the home itself. The final step is capturing these results. Click the Print Page button at the top of the interface to generate and download a comprehensive PDF report. This export is explicitly required for compliance. You must include this full PDF with your initial underwriting submission package to successfully prove net tangible benefit. Beyond compliance, this document is formatted for immediate client use. It serves as a polished, professional presentation asset that clearly illustrates their personalized savings. By mastering this comparator tool, you stop quoting standard rates and start mapping out a specific path to debt elimination. It accelerates your client's financial freedom and completes the documentation you need for a faster clear to close.